How I trade options and my scalping strategy. So I'm a scalper by nature, regardless of what product I'm trading. If it's stock, if it's options, the name, I scalp. That's my style overall. But I've gotten this question a handful of times, so I figured I would do a video on how I trade options, kind of the strikes, the thought process behind it. And the goal really is I'm just scalping them. I'm not holding them long term. I'm not swing trading these things. It's I use the options as a means to take the trade, and then I take the quick moves. So I just want to go over exactly, how I'm doing it. And a good example today's Wednesday, June 3rd, Boeing. Boeing had a nice breakout day. And kind of interestingly enough, how I did a video on Tesla a few days ago, if Boeing, so look, it's clearly catching some momentum. If this closes strong today, and then it has a little bit of a weak open tomorrow, I will be looking for a second day continuation setup on some weakness. If it opens weak, if it gaps up huge, that's a whole different trade and different setup. But if it has a little bit of weakness, I will be looking for today's high. That'll be the line in the sand. So that'll be a possible trade opportunity. Mentioning it prior to it even happening, because if it sets up like that, it'll just be interesting to see, how similar the patterns can look when names start to catch momentum. But regardless of that, today, so Boeing got pretty tight on the daily. Boeing has been really beat up. This thing was almost a $400 stock. Traded below 100. It's at 170 right now, so it took a 50% haircut. So I think that eventually there was going to be an opportunity, and today it broke out. Had some consolidation, caught up to the moving averages. The prior pivot high was this green line right here, 156.70. We were trading right around there pre-market, and unfortunately, I missed this. I missed this trade. I ended up trading ZM today just because it was a clean setup, and I was watching a handful of names, and I didn't take advantage of this. So I want to do a little bit of a recap on this to just realize I missed an opportunity and how I would have tried to trade it in my head. Kind of go back and do a little bit of a review, recap on what I would have done. So now some of the levels, what I'm looking at. 157.50 was pre-market high. I always like to jot pre-market high, pre-market low, and then maybe a major daily level. And if it's a major daily level to the upside, I make it green, kind of like a breakout level. If it's a major daily level to the downside, and I'm interested in possibly shorting something, even though I like to go long a lot more now, I'll make the line red. So I have an idea, even though I'm looking at a lower time frame chart, I have those major levels, upside breakout, downside breakout, and I color coordinate them. And then I also make pre-market high, pre-market low, baby blue, just the color I chose. So right off the open, here's Boeing. Right off the open. I don't really see a setup. I mean, if anything, maybe there's an opening range break to the downside, right? Because it has just push straight up off the open. Hard to chase. I try not to do that. And then quickly fails at the whole number. 1, 2, 3, 4, 5, 6 minutes of consolidation, and then it finally breaks it. So technically this is an opening range break to the downside, but Boeing is strong on the daily, so I'm not looking for that kind of trade. I'm trying to follow the trend. Even though I could have scalped this short, the trend is up. So now I try to wait for, okay, let it wash out. If anything, that could mean it, traps some shorts. And then if we go back towards those highs, that could be a possible setup. So now what does it do? Quickly finds a bottom, starts to work its way back to the high. And then right here is where it's set up, in my opinion. So high a day, this is more of a technical level momentum break scalp that I like, the setup that I look for. I like the opening ranges that are quick off the open, and the technical level momentum break scalps that are like 30 minutes plus into the day once, a high and a low have been established, and then once we consolidate towards those areas. And Boeing found a bottom, reclaimed VWAP, not following the 9 moving average, and the high of day was 158.08. So that's the technical level. What I try to do is I try to get an entry prior to that. And this is where I see a pretty clean opportunity because the trend is clearly up. Buyers have taken control. The chart looks good. The daily chart, so bigger time frame analysis, looks good. Now the pivot high was 157.73. So that is the pivot. So this pulled back to the 9, and once it cleared it, this would be an opportunity to go long. And then even if I felt like I really wanted to wait for confirmation, wait on the next candle and take it prior to that high break, and look how tight it is. So now there's, risk is not too far away. And I like to get in and have it go pretty quick. So just as an example of let's say I got in prior to 158. Let's say I got in 157.90s because I wanted to really wait for confirmation. Price gets really tight, 157.90s. I'm going to pull up an option chain. Now, I'm going to just go over the basics. I'm not going to do an in-depth analysis at all the Greeks of options and exactly how they're made up. But if you're brand new to options, calls mean you make money when the stock goes up. The calls go up in value as the price of the stock goes up. Puts, the value, the price of the options go up as the stock goes down. So if you're trading calls, you're long. If you're trading puts, just directional calls and puts, you're short. So what I do is I try to get a strike as close to where the price is currently trading. Now, I am not too worried about looking into the Greeks, theta, delta. I know some people get, when you're doing very complicated, complex option trades, those are important factors. I am 100% using the stock chart to trade, where I put entry, exit, where I take profits. I am watching the chart. I'm watching price action. All I'm doing is when I see the area that I want to go long or short, I'm clicking buy on the option that I want to trade. So if I was going long prior to the 158 break, I would trade the 160 calls. And they're very expensive now because Boeing had a massive day. But these were much cheaper when it was trading around 158. So I would do just out of the money. And a lot of times I wait if they're not too spready. Remember, I'm a scalper, so I am looking for an immediate quick move in price. So I am not messing around with limit orders. If the spread is too wide on the options, I will let it go by. But the moment the spread gets tight enough, I will market order in. And I typically trade anywhere from 3 to 5 contracts. I'm willing to eat the difference in the spread because if I believe it's going to go quick, the spread won't matter as long as it's not too big. If it's too big, I'll avoid it. So I got to be, I make a judgment based on where the current spread is. And all I'm doing is I have it up. So I'm watching the chart. I have the amount of contracts that I want to trade, and right at that price preset, because a lot of times I have a minute or two to make that decision. So I'll click on the 160. I have it populated my order entry for 3, 4, 5 contracts. And then I have my mouse over the submit button, watching price action, watching price action. Okay, I want to go long, submit. I'm not focusing super aggressively on delta, because I know that if I am trading very close to where the stock is currently trading, the options will move. They may not move penny for penny. They may not move penny for penny, but they will move, and they'll have a decent move. So because I'm scalping, I'm getting into that position right where I want to be long or short. And then the moment that the price action starts to slow down, I cut the position. And then I am looking at my P&L after the fact. And then it's, oh, okay, that's what I made. So this can be very complicated if you make it so. I try to make it as simple as possible. And I'm just using the options as a way to take advantage of the move. So that's how I would have traded this. And then there was even, just to go over some other examples, I don't trade too, usually the first hour, because a lot of times I've noticed that the accuracy goes way down after the fact. But just to even go through and just show some other setups. So Boeing had a massive day. I mean, it's probably still going. And we're almost at 170. I mean, this thing is crazy day. So I'm going to go through the chart and just kind of look at some other possible patterns and setups and see what I would have done. See, here's a good example right here. So this thing consolidates towards the highs, right? The 9 moving average is right near price action. A little bit of a flag pattern. we crack 160, that would be my trigger to give it a shot, see if there's more upside room. Risk could be off that, I would risk off that pivot low. So risking only about 50 cents, I would have traded the 160s. So right at the money. So these would have moved a lot because it's right at the money. That's ideal. In a perfect world, I like to take, if I'm going long, I like to take a contract that's right at the price of where I currently want to be long at. So this is a great example. Long at 160, able to get into the 160 calls. So those are going to move pretty good. And I'm not overthinking and looking at all the details. It's just, okay, I want to go long at 160. I'm going to take the 160 calls. I'm going to take those strikes. And I always trade the same week. I'm not swing trading these, so I'm not worried about the theta burn. I'm only scalping for minutes at a time. So I always do the same week so they can move as close to penny for penny with the stock as possible. Now let's just keep going through. And I'll just keep kind of giving examples. So here's another setup, right? This kind of flags, catches up to the 9 moving average, breaks around 160, 250s. Let's say I think that this has more upside room. I'm going to be trading on this specific pattern right here, the 160, 250 call. So here's a couple good examples of being able to be in the calls that are almost exactly right where the price is trading. That's ideal. Sometimes I don't get that, and it's okay. I just deal with it. But that's a perfect example of being able to be in an option that is almost identical to where the price is currently trading at. And I'll keep going because I think there was one more. I would not, at these prices, I think Boeing is extended, and I wouldn't continuously just keep chasing higher, because even though today is a massive uptrend day on Boeing, probably an all-day uptrend, I know that if I continuously keep chasing price, it's not a good habit for me, so I avoid that. But here's another opportunity. So long period of consolidation, catches up to the 9, breaks above 183.50s is about the area. Now here's an example of where it's hard to get contracts at that price. So I'm just going to go to the next out of the money strike. I like to trade just out of the money because if it goes against me, I don't get hurt too bad. But then there's also the downside that if it does go in my favor, it doesn't move as fast. Still moves, just not as fast. So let's say I want to consider going long right around 163.40s, anticipating the new high day break. I'm going to be trading the 165 strike. So here's an example of just out of the money. Because of where the stock is currently trading, I'm not able to get into a strike that is right at it. So I go next out of the money, and it would be the 165s. And then at these prices, it just continuously keeps getting. I mean, look at this. Even another one. 160, the high is right around 167. Consolidation, following the 9. Nice, just continuous trend. Catches up to the 9, breaks the whole number. Let's assume I wanted to go long right before the 167 crack. I'm going to use, this is another good example of being able to be in a strike that's close to the current price, the 167.50s. Same week expiration, always. And then Boeing is just, I mean, what a beast of a move. So I think hopefully you get the picture of how I'm looking at it. And I don't overthink it. I know some people can really overthink it. I'm just using the option as a way to be involved. And I'm trading the names that are more liquid. Like I don't trade options on Chipotle and some of the names where they're illiquid and the spreads are really wide. I'm only using options on the stocks that are a little bit more expensive and have really good liquidity. So the spreads are, for the most part, pretty tight. Because if you just go try to trade options on any name, especially one that doesn't have a lot of daily volume, the option liquidity can be pretty bad. And if they go against you, not good. The spreads can really widen up and you take a huge loss. So I'm typically trading options on the same basket of names: Tesla, Netflix, Facebook, Apple, Boeing, very liquid, high volume names. So I don't have to worry too much about any sort of widespread in them. That's how I do it. I'm interested to see if anybody else trades options and how you trade it. So let me know in the comments if you trade options. how you do, or if you're looking to get involved in trading options, because it's a very interesting way to be involved in trading, especially because there's no PDT rule behind them. You can open up a cash account and trade options and be under the 25K and trade as much as you want. So there's a lot of benefits there. And there is some negatives too, but under 25K, a great way to be involved. So that's it. Thanks for watching, and I will see you in the next video.